I think also on our end, somebody pushed the wrong button, and sometimes that just happens.
Perfect.
Yeah, take the stage.
Great. So I'm excited to dive into it today. We're talking about tokenization and the trends of the industry and where we're going to be going here moving forward. And just to introduce myself, my name is Kyle Sonlin. I'm a founding partner of Security Token Group, but I spend most of my time as the CEO of Security Token Market. Security Token Market is the leading data and analytics firm in the security token space. We track on-chain data around these transactions, as well as building media and research content to drive industry adoption of the security token space. And so specifically, we focus really on the secondary markets and how these assets are trading. And so I thought that maybe the best way that we could dive into the conversation today when talking about industry trends and forecasts is maybe to just give a brief overview of the security token industry from a trading perspective and what's actually trading right now. And so when we look at the industry as of May or April of 2021, as of our last published report, T0 here in the United States is the leader by a significant margin in both trading volume as well as market cap, representing about 71% of the total security token market cap through 3 security tokens: Overstock, T0, and Aspen. And so Overstock is actually the former parent company of T0, which is the exchange that these things trade on. They would call it a marketplace due to regulations and specifications on compliance. And so they are a marketplace that trades security tokens. They have their own token, T0, TZROP is the ticker. And that one is a revenue share of the exchange fees generated by the platform. Then they've got Overstock, which actually is equity in that former parent company, Overstock, which also has a NASDAQ live stock as well. So the price of the security token actually does differ from the public stock market variant. And so it's been fascinating to watch those things as they change over time and as there's been arbitrage opportunities between those different assets. And then finally, they've got the St. Regis Aspen Hotel, which is a real estate property that is tokenized and trading on the platform. And so not only do they have nearly 71% of the market cap, but they've got like 90% of the trading volume on a monthly basis. That is nearly, I want to say it's about $3.6 million as of the month of April, of about 500 million in total market cap. And then moving on past T0, we do have another US-based marketplace, Open Finance, which does trade some venture capital shares as well as a few other things, but there's not a ton of liquidity on that platform. We also see a few other different exchanges, but the one that we want to highlight, want to dive into for the sake of brevity, is Uniswap, which is a decentralized exchange. You may be familiar with Uniswap due to its capabilities in the DeFi space as well as through Ethereum. But the way Uniswap works is it's essentially a marketplace that is decentralized that allows you to swap any ERC20 based asset seamlessly. You can list it seamlessly and you can swap that seamlessly, and it drives adoption through its automated market making model, which essentially allows users to find price transparency for the underlying asset by incentivizing long-term holders to stake their asset into the protocol to provide liquidity for trading. It's a pretty innovative model that they've pioneered alongside others like Curve, Balancer, and many more. Now, certainly the model is increasingly popular since Uniswap has really proved the concept. And Uniswap is providing some interesting liquidity for security tokens. They traditionally launched as a crypto platform trading any Ethereum-based token, but because security tokens can be minted on the Ethereum blockchain, we also can have support for Ethereum tokens. And so the largest example of how this has been the most successful is through real estate. And there's a company here in South Florida known as Realty. You may be familiar with them, but what they're doing is they're taking real estate properties and they're tokenizing them here in the United States. And so they're taking individual residential properties in Detroit, Michigan, in New York City, in Florida, and in other places. And these are dividend rental income generating houses. So these properties are traditionally low income, so they're and they're low market cap as well, and probably the $50,000 to $100,000 range on average. But they're paying out 10 to 12% in dividends per year through rental income generated by the tenants staying in the property. On top of that, many of these properties are guaranteed or backed in a portion or in full by the government through Section 8 housing regulations that actually allow for government subsidy for low-income housing. And so for investors, we see this opportunity to get very high yield at 10 to 12%, backed by an underlying real estate property like here in the United States, and have it be partially or fully guaranteed by the government in the event of a default, which makes it seem like a very low risk opportunity. And so we're seeing these assets come to market very quickly, issued by Realty. They've issued, I think, almost 80 or 90 of these properties now for anywhere from a $5 to $10 million market cap. And it's been fascinating to see the demand here, especially from international investors, people who are looking for US dollar denominated income generating assets, right? Assets that are going to be paying you out in US dollars as they pay out in stablecoin, specifically in DAI or in others. And having access to that is fascinating. Not only that, but backed by US real estate is a cool opportunity, because again, it's not just the dividends that you're getting paid, you're also getting paid equity in the underlying property. You are an investor, you are an owner in that real estate property. And so that does come with its own benefits in terms of equity appreciation, as well as ownership of the underlying asset. And so Uniswap has been a great opportunity for Realty to immediately list these properties on once there is, after their lockup period here in the United States, based off of how you raise money, there is a lockup period for that. So you do have to maintain the compliance there. But then once you're finished with that lockup period, which is anywhere from 6 to 12 months, depending on what regulation you raise through, whether it's Reg S for international investors or D for US investors. Once you complete that period, Realty has actually been able to list those on Uniswap. So we've seen a significant portion of those lists on Uniswap, and now LivinSwap, which is the layer 2 Ethereum solution that is meant to essentially complement the Uniswap trading platform by providing a layer 2 solution which reduces the gas fees, because as many of you may be aware, Ethereum has had some issues as of recently in terms of bloating gas fees, causing a significant cost of capital per transaction, which is not very practical, not only for a trader who's looking to exchange these assets quickly, but also if you're paying out dividends on chain, you're going to be paying out dividends and paying hefty fees alongside that, which is not practical for a dividend payment, that you actually may be paying more fees than you're actually paying in the dividend itself. And so we've seen these real estate properties be very, very successful and in very high demand. And then finally, we've seen other issuers take advantage of this as well internationally. Mount Pelerin is a great example. They're an issuance platform based out of Switzerland, and they tokenized their own equity and listed that on Uniswap as well. And so we've seen a lot of significant development in this market. We grew a 12x in the last 12 months. So from April 2020, the market cap of the industry was around $53 million. Now we're looking at $696 million. And so really the difference here is that a lot of these exchanges and marketplaces here in the United States and internationally, it takes quite a long time to get the licenses and regulation needed to be able to list assets. So I think that it's definitely, it's one of those things where there's a lot of upfront time that's required to get these licenses, to get the permissions to list these assets. But then once you're there, once you have that infrastructure built, you're then able to replicate and scale this process much more effectively. That's what we've seen here with some of these platforms. With T0, they were able to go and list additional assets. With Open Finance, they were able to do the same. And we've seen many other tokens that have come to market through TokenSoft, through NExchange, and through Uniswap. So there's been some really exciting stuff going on in the market from the past. And then we want to look forward. And looking forward, we have to expect that this trend is going to continue. I was able to speak with T0 through their recent investor earnings call recently, and they expect to list 5 or 6 different assets over the course of the next 30 to 60 days, hopefully, maybe 90 if they push it. But they're expecting to list multiple different assets here coming soon, which I think will tremendously boost the market cap, especially because they are the liquidity leader in terms of driving the most significant volume. On top of that, our second largest exchange or marketplace, Open Finance, has been acquired. They've been acquired by INX, which just raised a boatload of money to drive additional liquidity to the security token market and is going to be listing additional assets. They don't need to go through the same licensure process because they've actually acquired the licenses that they've needed. Then we've got Merge. Merge Exchange is based out of the Seychelles. They're providing security token liquidity for Curzio equity owners, the equity-based security token here in the United States, launched by Frank Curzio. That is equity in a financial newsletter company, and he has fully successfully raised the security token offering and listed that onto secondary markets. And so Merge is a great opportunity for new issuers. I think they've struck a deal with Exodus as well as with LMX and a few others to list assets there. And oh, by the way, Exodus also may list on T0. So that's a $75 million Reg A plus fundraise that was just completed here in the United States to the crowd. It was a crowd-funded opportunity, and that will be listing as well. So a lot of these different assets have successfully raised and are in that process of clearing the lockup period and reaching investors through these exchanges. And so we would very much expect these assets to go live and be listed very quickly onto their respective marketplaces to drive the growth of the industry. At 696 million, we're only about $300 million away from crushing that $1 billion market cap rate, which is something we definitely have been watching very closely as we're very excited to see this industry grow and scale. So that's a brief overview of the security token trading market. I do want to remind anybody, unfortunately, we were a little bit late to get started here because of some technical issues. But if you have any questions, definitely drop them in the chat. I'd be happy to answer anything that you're wondering about the industry. But if not, I'm happy to just continue and keep talking a little bit about some of these other assets, some of these exciting things that are going to be coming to market. I mean, the reality is we've seen in the beginning of the security token industry, there was a lot of issuers that were looking to avoid using traditional financial structuring for their security tokens. And this is something that when we worked with clients, when we spoke on our podcast, the Security Token Show, and really tried to drive adoption for the industry, we had to make sure that issuers realized that you need to build an attractive vehicle and an attractive deal for anybody to invest, right? Launching a security token offering using blockchain technology, blah, 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 doesn't actually allow you to just issue something that has no strong structure, that is not an attractive financial investment. You need to make sure that these things are structured in a way that an investor does see the opportunity here. You can't just be greedy and try to issue something that's not that valuable and expect that investors are going to rally around that individual asset or that opportunity. So what we've seen over the last year to 2 years is that trend is starting to grow and develop now. We're not seeing quite as many revenue share tokens, for example. This is a structure that I have been very critical of in the past, and I continue to be relatively critical of, especially for early stage businesses that aren't generating significant revenues, that haven't exactly developed product market fit, that haven't built a strong profitable business prior to fundraising. If you're not fitting those categories, if you're not checking those boxes, I think that structure is something that you should tend to avoid or stay away from. And we do have a great question coming in here from Ari, and he asks, how does Realty solve the regulatory issues of listing on Uniswap? Seems many trades may violate securities laws. Is there any special regulation? This is a great question, and I do want to first highlight, I am not a lawyer, so this is not legal advice. It's not financial advice. Definitely, you need to speak with a lawyer before doing anything similar, and don't take my word as law here. But I think the way that I understand the way that Realty is currently working is that they are operating a regulated whitelist from their side. So Uniswap allows anyone to swap assets, but with the security tokens, they actually have them whitelist only. So you actually need to register through Realty, at which time Realty will operate the KYC, the AML, and the accreditation, depending on your jurisdiction. And well, then if you in fact pass those things and you're eligible to trade, you will then be able to trade those tokens. I do have to note that I think a bunch of them are international only. and international security tokens are much lighter on the compliance, as we've seen from Mount Pelerin as well has similar pieces where I think that you don't need, there's something along the lines of like you don't need to check with your compliance or something like that until after you liquidate or after you sell or something along those lines. I'm not exactly sure. Again, I'm not an international lawyer especially, but from the US side for Realty, they conduct that through a Reg D 506C offering where you're investing in the asset that way. And then on the secondary markets, they operate a regulated whitelist. The question is this compliant? Is the SEC allowing this? And I think really what we're seeing is that the SEC has not acted upon it yet, but they certainly have not approved this action. And since Uniswap is not a licensed ATS, it does make you wonder if the SEC is going to be okay with this moving forward. So I'm not sure this is the most scalable solution, especially for US investors, because there may be a situation in which this is shut down. But for now, it's working out pretty well, and they seem to be doing strong volume despite the low market caps. And then moving into Jake's question, Jake asks, how do we get around the 100 investor REIT rule regarding real estate investing? This is a good question as well. I actually don't know quite as much about the 100 investor REIT rule specifically. I know this also could be applied to the broader Section 12G 2000 shareholder rule, which essentially says that no private company can have more than, I guess it's 2,000 shareholders before needing to register as a publicly reporting company. And this is one of those small little niche pieces of the fundraising regulations that does seem to cause a significant hindrance to the adoption of the industry. However, we have seen the SEC seems to be very light on enforcing this, especially with Reg CF deals and Reg A plus deals. Both of these require you to work directly with a broker, and especially in the Reg A plus example, it's really like almost you're doing an IPO. You're doing a light version of the IPO, but you are doing much of the process. And so they seem to be very hands-off in terms of this so far because they're trying to embrace the crowdfunding aspect of a lot of these regulations. So if there is a 100 investor REIT rule, I would think that maybe what one workaround that we've seen in the past is potentially creating a business entity that owns the REIT and then selling shares of that business entity, which would then allow you to increase that shareholder limit. But again, I'm not a lawyer and I do not know, none of this is legal advice, so don't follow any of this. I'm kind of just ideating at this point. But that certainly would seem to be something that would make it difficult. I don't know how other funds act here as well, because a REIT is a specific type of vehicle that potentially creating a real estate fund or a private real estate fund that invests directly into secondary market products could be another example or opportunity to get additional shareholders onto the cap table. You just might miss out on some of the tax benefits that come with a REIT. And then finally, Bjorn asks, can we do 1301 exchanges for real estate security tokens in the US? And I actually am not familiar with what you're referencing here from a 1301 exchange perspective. But again, what we're seeing is that in the US, there are really two different types of licensed marketplaces that can provide liquidity for securities. And that is an alternative trading system, an ATS, and that is a national exchange, excuse me. And so with an ATS, that's really just an upgraded broker dealer. I don't want to undersell it because it is still a lot of work to get that live and launched, but it's essentially a broker dealer that's allowed to manage swaps between issuers. And this was traditionally a very rigid process where the SEC or FINRA was not endorsing any kind of price transparency, essentially where you were really only allowed to create an order board or an offer board where one person could say, I want to sell 5 shares for $15, and one person could say, I want to buy those shares for $15. They couldn't, create a full order book, and they couldn't provide a lot of price transparency. I think that's getting looser. Again, I don't have an ATS license, so my real in-depth knowledge of exactly what they can and can't do, I don't even know if that's specifically defined, especially for digital securities at this point. But you see ATSs are becoming more and more popular. We've got the traditional players that I talked about already, T0 and Open Finance, but then you also have almost a dozen more that have been approved over the last maybe 12 to 18 months. You've got Texture Capital and North Capital, Securitized Markets, Oasis, Rialto, and many, many more. So we're seeing a lot of these ATSs come to market to be able to provide liquidity for these things. And yes, they can provide liquidity for real estate assets. We see it with T0 trading the St. Regis Aspen property. But again, I do believe that that's structured as a business entity. So you have to think about exactly how those things are structured. Structuring it as a business entity is traditionally the easiest way to do that. And I think that that's the exact, that's probably the answer that I have. From a national exchange perspective, you could absolutely do that as well. We have not seen one approved for security tokens. The only example I can think of is the Boston Security Token Exchange, which was launched by Box Exchange and T0 as a joint venture. And they are still in the process of seeing if they can get approved for that. They've gone back and forth and back and forth and back and forth with the SEC about potentially getting that launched. And I think they're still definitely in the weeds on that one. But at some point, that will hopefully go live, and they may end up providing real estate liquidity as well. That one is certainly focused on much larger market caps than what we're seeing from T0. We also have a question from Klaus, and he asks, what significance do you see for the DeFi collateralization of real estate-backed security tokens in the future? And this is a great question, and I loved digging into this a lot. We see already some present examples of that, including from a company called Reno here in Connecticut. And Reno is actually already providing some kind of collateralized lending for investors investing in real estate on their platform. And so, as I mentioned, there's this lockup period with real estate, or not even real estate, with private securities. That's a 12-month lockup for investors here in the US and 6 months for investors outside the US through a Reg S. And so what we're seeing with Reno, which has been fascinating, is that you can actually collateralize a loan for that lockup period. So over that 12-month period, you can get up to 75% of your initial investment back in a collateralized loan and be able to use that over the period or the duration of your lockup period before receiving your assets there at the 12-month time. So there's some really interesting examples, and I think we're going to see many more moving forward.
Okay, thank you, Kyle. Unfortunately, there is no more time for questions, but I think that you did a great job in 20 minutes. Wow, you can communicate. Thank you so much.
Thanks for having me.
For joining us, and I'm sorry for the technical difficulties.
No, my bad. It might have been my fault. I was waiting in the waiting room, but I had joined the wrong link. So,
if people want to contact you and they have more questions that you did not have time to answer, do you have a social media handle, or how do they contact you?
Yeah, Kyle Sonlin on Twitter is the easiest way to do it. It's my first name, last name, no space in there. So KYLESONLIN. You can find me there, send me a direct message, and I'm usually the most responsive on that platform, honestly.
Fantastic. Okay, well, I will end the session now. Thank you so much. And for the audience, you can go to the reception area, and in a minute, the next session with Alex will begin. So thank you very much. Bye-bye.
Thanks for everybody asking questions. See ya.
Bye.